Hey there, welcome to the channel. So today I want to take a look at what's going on in the stock market. All right, so today I haven't looked at the stock market in quite a while, but one of the things that has been going on is so here take a look at the spiders, the SPY, which is the ETF for the S&P 500. And so you can see here that what's really going on is that there's a lot of basically, it really looks like a huge base has come in. So, let me zoom out here just for a minute. Yeah, so going back in time, see, back here in 2020, we had all this crap, right? We had the cerveza sickness shutdown and all that crap. But ever since then, this market has been pretty much straight up. You had a little bit of correction here, and then over here, a little bit of correction, but pretty much straight up into the beginning of 2022. But what's happened is we've been in a huge base that whole time, and the market has sold off and we have this huge W here. So it's really kind of interesting. It's like you have a situation where there's just a huge consolidation that's been going on, and this is continuing to move on. But some of the important things to kind of notice is you have the golden cross over here. You have the 50 overtaking the 200 day, and that happened back in February. But the thing is, it's keeps working its way up. It keeps just pushing up and consolidating and starting to really break out of this base. So one of the areas here is right over right here between this 410 and 420, and this thing is now at the 420. So the point of this is that you have resistance here, you have like some resistance here, and it's this like working its way up and breaking out of that resistance. You were coming down, you put in this low down here, and then you got a higher low, another higher low, and it's just kind of working its way through. So my conclusion right now is that what's really going on with this thing is that, hey, we've had this huge consolidation, and this consolidation for all the reasons that you can imagine. We have the war in Ukraine going on. We have the high inflation and the Fed raising interest rates and all that stuff going on. And then we have a bunch of economic data right now that's kind of really very poor and makes you kind of wonder whether, we're actually in recession at this time. But see, the thing is, a stock market climbs a wall of worry. And that's exactly what's been going on. It's been really putting in this big base and moving on. Now, if we go ahead and we try to look at what's going on, we can start kind of figuring out, different things. Yay. Okay. So I think that's really what's happened here. We did have a sell-off in the market, and it was a real sell-off, and we did have a correction. But the thing is, it really put in this base, and it's really been becoming very clear to me that this base really is it seems to be a very solid base. Now it's interesting because I listened to all the the Euro University, the all the kind of George Gammon guys and stuff, and there's a lot of talk, and a lot of the data actually is very weak. So at the same time that the market has, put in this base, there's a lot of weak data out there, weak economic data. So really the question becomes like, okay, well, why is the market doing this? And is it, real? Well, the reality is, we really can't say, right? We can't say that the market is basically doing what? We have all this inverted yield curve, et cetera, that has happened. And, it's probably going to reverse. And, the Fed is finally coming around and will, that's the other thing to keep in mind. If nothing really blows up, it's liable that the Fed is not going to magically suddenly turn around and start reversing course and lowering interest rates. If that's the case, then they're liable to just leave rates where they are and just hold them. I mean, why would they go ahead and lower interest rates? That's probably unlikely that they will do that. So, but the thing is, now you're in a situation where it's like you have the stability. The market kind of knows what's going on. And I wouldn't be surprised if we have a weakness in earnings that are going to be coming up. And that wouldn't surprise me at all. But the question is, weak earnings, is that enough to cause, for example, the market to crash or some big economic thing? And the answer is, well, probably no. So I think in the big picture, I've been kind of surprised in this whole cycle because I've been, looking at these stocks for a long time. I've been, involved in the market for a very long time, going back to I started really looking at stocks for the first time. I was working as an engineer, and I still work as an engineer, but in the late 90s. And so what was going on at that time is there was all these tech startups, and I'm out in San Diego, and I remember the big one out here was Broadcom. Okay, Broadcom was huge. It was pre-IPO. All the engineers, like the company I was at, whatever engineers could get over there got over there. They got shares at like some, who knows. The rumor was they were getting shares, and they were able to buy them at or get them at priced at like 7 cents a share pre-IPO, and that thing eventually went to like whatever equivalent of $1,000 or more. So I mean, these people made a killing. But the point is, that was the tech bubble. And so you look at that time, you had the tech bubble, and then later on we had going on in 2008, 2009, we had the financial crisis. And then what happened at that time is the Fed just lowered rates to the floor, and they kept them there forever. And they were really trying. And if you remember the discussion way back then when they were holding rates, basically at zero. They had held them after the financial crisis for almost like 10 years at zero. And the discussion was, and it was called pushing on a string. So basically, the Fed's like, hey, we're trying to get to our 2% inflation, and they just can't get there, right? All the inflation numbers are like really low. They just cannot get to that inflation rate. Then all of a sudden, COVID happens in 2020, and all of a sudden, what happens? Oh, all of a sudden, 6 months into that, the Fed's basically, the government's handing out checks. The Fed is printing money, whatever. They're all just like passing money around to the average person. And what really happened is we get this high inflation. Now, why did we get the high inflation? Now, I know that a lot of people are focused on, the supply problems because of COVID and the shutdowns of COVID, but that's only part of the answer. Very clearly, if you look like the M2 money supply, and even now looking at the M2, now it's starting to decline. But what you had is they just increased the money supply by something like 25% in 1 year. This huge rate of increase and the amount of money out there. So what does that mean? That means that's the main problem with the inflation. They put that money out there, and that money basically caused inflation because it can work in two ways. You basically have more money chasing fewer goods. So in this case, you had both effects. You had fewer goods and services because of the COVID stuff. And then at the same time, you had a situation where you had all this extra money. Basically, it was really interesting because um, people basically had a lot of money. They were getting money from the government. They were getting relief from things like their rent and stuff, and relief from paying their college loans. And all this means that they're flush with money. So basically they're spending money. They have money to spend, but they're not producing anything. So of course, this is exactly what happened, and this led to that like spike in inflation that then was supposedly going to be transitory, and it really wasn't. It lasted a while. Now the inflation rate has finally come down. It's finally getting to that point where we're in lower inflation, disinflation type of situation as it is now. But there's no reason to believe that it's just magically going to turn off. And so when we look at the situation, then why are we back to, it's interesting. Why is the market doing what it's doing? Well, for whatever reason, this is sort of the problem. If you look at it, when you look at that chart, and it's like, okay, this is a really huge base, and it's a base that's taking, over a year to form. And, basically I've been in this situation many times before, and it's like, look, if I don't have some stocks, I'm going to regret it because this is just quite the setup. And at the same time, I listen to all these guys that are talking about the problems in the economy, which I don't deny their numbers. I can't refute them or not refute them. But then there's this element of, well, why is the market doing what it's doing? And that's always the problem that you have. You have this problem where the market is kind of diverging from the economy. And so if you focus on what the economy is doing and not what the market itself is doing, you can get yourself distracted. Now, of course, it's important to understand that this could just all change. This could be like, oh, there could be a huge crash and someone can report really bad numbers and we could put in like huge weekly down bars, which would reverse this whole thing. That's certainly a possibility for sure, man. But as it is right now, that's not there in the charts. And another interesting thing to keep in mind when you look at these charts, like, and you look at volume. So the idea with technical analysis is that you really want your volume to confirm the price action. But there's, when you kind of look at these cycles over the last, 20 years, what you'll find is that very often, you get these spikes in volume on the downside. But on the upside, as it's working its way up and going up significantly, there's often like not really a lot of high volume. And so, yes, of course, this is something that can be a concern, but it very often it just doesn't really matter. It's like, okay, it's still going up. So at the end of the day, you have to ask, what is the thing that you, as someone, buying stocks, is your concern? And be clear, this is not financial advice. This is this overall thinking about what's going on. And this is something where you could, you could ask questions. But the point of it all is that if you're looking at this situation, um, the market is doing what it's doing. That's really the price action is really the main thing driving this. So that's my thoughts on this market. It's kind of interesting because it's really honestly, it's a stealth bull market. We've moved from, the market was in correction. The market never really totally crashed. It just had a significant correction, and now we're basically breaking out of this base. So if you look at history and you look at the charts and you look at them over time, this is where the opportunities are. The opportunities are when you're breaking out of a base. That's when you have the opportunity to participate. So when you hear all the negativity out there, I certainly, of course, do pay attention to it. And I, of course, would encourage you to pay attention to your financial advisor. But just on the other side of the coin, you always have to look at both sides of it. You have to look at what's the bear case and then what's the bull case. And then if you just look at the charts and the charts alone, I mean, it's pretty obvious we're moving up right now. All right, that's it for this one. Talk to you later. Bye. Okay. Oh, it didn't share?